Good morning, traders. Today is Thursday, and here's your latest market update. So, starting with the US dollar index, the US dollar index stayed above 100 on Wednesday and near its highest level since May, as risk aversion drove demand for the safe haven currencies. And the global equities fell amid growing concerns over stretched AI valuations and warnings from major Wall Street bank CEOs about potential market corrections. The dollar was also supported by speculation that the Fed may hold rates steady in December, with officials signaling caution towards further easing. The market now prices a 69% chance of a 25 basis point cut next month, down from around 90% before last week's FOMC decision. Meanwhile, the ongoing US government shutdown, which is the longest on record, continues to cloud the outlook by delaying the key economic data. And technically, the dollar index has rebounded to 100.26, forming a double top pattern with the August high. The near term outlook remains cautiously bullish, underpinned by safe haven flows and softer rate cut expectations. And the resistance lies at 100.53 and 100.72. Sustained break could pave the way towards 101, but the failure to break higher, however, could trigger a pullback towards 99.46 and even lower at 98.71. And moving to WTI crude oil, the oil prices traded below $60 a barrel, extending Tuesday's losses amid rising supply and weak demand concerns. The EIA data showed a 5.2 million barrel build in US crude inventories, which is the largest since July. Prices were pressured by higher output from OPEC Plus and non members, while PMI data from Asia and the US confirmed slowing industrial demand. The OPEC Plus agreed to a modest December increase, but will also pause hikes early next year due to the soft seasonal demand. Meanwhile, geopolitical risks linger. A Ukrainian drone attack set a Russian tanker ablaze in the Black Sea, disrupting operations at a major refinery. And technically, WTI remains a range bound between 59.48 and 62.38. The RSI near 50 shows balanced momentum. A break above 62.38 could open the way to 63 and 64. And conversely, a drop below 59.48 may drive the price towards 59 and $58. And next, spot gold. Gold traded in a narrow band around 39.80 per ounce on Wednesday, consolidating after its sharp October rally. The stronger dollar's climb above 100 has dampened demand from non-USD buyers. The gold has now entered a sideways rebalancing phase following its record high of 43.81 on October 20th. The market sentiment remains caught between moderating rate cut expectation and sustained central bank gold demand. And technically, gold is fluctuating between 39.20 to $4,000 with RSI near 48, signaling indecision. Resistance sits at 39.88 and $4,000, which is the psychological barrier. And a close above could target 40.60 and even at 4100. And on the downside, support lies at 39.33 and 3900, with deeper correction at 38.86. So despite short-term consolidation, gold long-term outlook remains underpinned by sticky inflation, geopolitical risk, and also central bank buying. And last but not least, the Australian dollar. The Aussie dollar slipped to 64.58, which is the 11-week low before rebounding above 65 cents as the global risk aversion overshadowed the RBA's hawkish tone. The central bank kept rate steady at 3.6%, noting that persistent inflation and limited room for further easing. Markets now assign a low probability of rate cuts this year, suggesting the tightening cycle may be near its end. But still, a risk off sentiment driven by falling US tech stocks and also renewed valuation concerns continues to weigh on the Aussie. And technically, Australian dollar remains trapped in a 64 cents to 66 cents range, awaiting a fresh catalyst. The RSI near 45 signals further downside risk. The key support sits at 64.46 and also at 64.40. A break lower may target 63.72. On the upside, the resistance stands at 65.38, followed by 66 cents and also 66.30, which is the October high. So that concludes today's morning review. I keep an eye on the ongoing Fed commentary. So trade safe, and I will see you in the next update.